What's going on? Alex here, and today we're going to take a look at an example of what can happen when bad bookkeeping becomes a tax nightmare. Let's take a look. This is a case study that I found here on a public Tax Pro Talk forum, and this is where tax professionals come to discuss issues that they're having in preparing their clients' returns. So this isn't an individual that's looking for help with their tax return. This is a tax professional who's looking for help with a return that they prepared for their client. And it says here that this person may have gotten themselves into a bit of a pickle on this tax return. Client is an LLC that elected C Corp status, and therefore we file Form 1120. Makes sense so far? For 2020, client sent me a bank export for the entire year for me to go through to file his tax return. Okay. My bookkeeper and I had to go through all the transactions and try to get them classified, but due to time constraints, rushing, lack of transparency, and client's unwillingness to pay larger fees, we now know the return was prepared a bit sloppy. The problem is that a few weeks ago, a client received the notice from the IRS saying that the return was selected for examination, in other words, audit. Specifically, they're questioning 3 line items: cost of goods sold, or COGS, outside services, and shareholder loan. Those are big ticket items typically for the C Corp returns. You got to be careful in those areas. I spoke with the revenue agent immediately and set up a call. Obviously, this is now a frantic situation because there's a deadline attached to these IRS notices that come in. So there are obvious reasons for this preparer to be panicking a bit in this situation. Yesterday, I spent almost all day digging into the bank detail originally used to prepare the return and questioned my client a lot on the transactions, and it turns out that a lot are personal. The shareholder loan doesn't have any official loan agreement, another issue, and there might not be backup documentation for other expenses. All right, now we see that there are several issues with this tax return, and now we are seeing how the bookkeeping is affecting the tax situation. I do not have experience handling an audit, and because this is such a mess, I reached out to 2 colleagues who do, and one immediately couldn't take it on, and I'm waiting to hear back from the other. I sense tension in this situation, as there should be. My biggest concerns: 2021 was also prepared this way, so now we have 2 tax returns in question, and filed at the end of March 2022. I believe 2021 needs amending. So what happened here, and I don't necessarily blame this tax preparer, this is something we see fairly often, unfortunately. It's when clients neglect their bookkeeping for the entire year, either by not having it done at all, or by having somebody in their family do it, somebody that woke up one day and decided they're a tax preparer or a bookkeeper, and suddenly they are masters in accounting. And it all comes to light when it comes time to file the tax returns, because we as tax professionals need to have the bookkeeping at a certain level before we file a tax return with that information. Because if the bookkeeping looks crazy and we just slap it onto a return and call it a day, we're going to have a lot of problems, or as they say, a lot of explaining to do, okay? So if the bookkeeping is shoddy, we can't just throw it onto the return. We have to do due diligence to find out what is potentially wrong, fix everything, and then get it on the return. But in this situation, clearly there wasn't enough time. There was some rushing that was going on, and returns were filed that were less than perfect, okay? Let's look at how this plays out. Now, this person posted this on October 22nd, 2022. And again, I'm not trying to chastise this person. I'm not trying to denigrate their work. Busy season is just that. It's a rush job for many tax professionals, and in many cases, you need to get it done by the deadline, and bad bookkeeping only makes this more difficult. So I'm not blaming this tax professional. It's just the way it played out, and we're using this as a case study because it was on a public forum. The original post was made on October 22nd, 2022, and we scroll down here, and now we're at the 25th of April, 2023, so this is a few months later. And this person writes, updating this thread as the audit is now over. So let's see how this played out. We amended the 2019 corporate return, and the IRS agent accepted that with no questions asked. Whew. Okay, that's a load lifted off the shoulders there, and confirmed that they would not open it up for audit since the statute of limitations was approaching quickly. So they lucked out on 2019. Even if they were skeletons on that return, they are not going to be brought to light because of the statute of limitations, which kicks in many situations. Number 2, completed the audit for 2020 and 2021 corporate returns and the personal returns of the 50% owner. You have to remember that when the IRS gets their hands on your business return, they're going to be real curious about the personal returns and all the other returns that are connected to it. So you have to keep that in mind, in that when there is bad bookkeeping at the corporate level, you're very well going to end up getting your personal returns audited as well in many cases. So this is where you have to tread lightly and understand the investment you're making in the bookkeeping is paying off more than just at the company level. It can also pay off at the personal level because you're avoiding issues there and people asking more questions than you'd like them to ask. As the records were sloppy at best, this required a significant amount of work. This is referring to the 2020 and 2021 corporate and personal returns. But I was able to get the agent to accept a lot of the expenses without much detail. Other expenses required backup, which the client was able to provide. Thankfully, that's not always the case. Overall, I got about $30,000 of tax reduced over the tax bill for those years. Okay, so there was some tax reduction, but let's see how this plays out. But total bill still stands at $151,000. Take a second and think of your business. You might be running a pretty solid, smooth operation. But ask yourself, do you have an extra $151,000 laying around to pay to the IRS at a moment's notice? Because if you didn't plan for this, which if you have shoddy books, chances are you didn't know what your income was in the first place, so you don't have a reserve set aside for the exact amount of taxes that you may owe. And this is what the result could be. Not a great situation. And this doesn't even take into account the impact on the state returns, because remember, if you have an underpayment of tax at the federal level, there's a very good chance that you also have underpayment of tax at the state levels. Not necessarily, but if you're amending the corporate returns at the federal side, then you very often have to also amend the state side, which can add taxes, penalties, and interest. So right now, this $151,000, we're only talking about the federal impact. You then have to deal with the state impact after that. So total penalties, $19,000. Total interest, $9,000. Client was hoping to pay $110,000. This is kind of a funny aspect of, well, it's a sad situation, but this is always a bit humorous where clients come up with a number and they say, I'll pay 30 grand. Can you get it down to 30 grand? In many cases, we can't, but we'll see what we can do. But there's always a target number that a client has in mind. Often it has to do with how much they have in the bank account ready to go. But in this case, client was looking to pay $110 and it didn't play out that way. So we're looking at a $151,000 bill between the personal and the corporate. We'll take a look at some more details here shortly. Client was hoping to pay $110 and negotiate penalties and interest lower, but interest is not allowed to be removed and her manager refused to lower penalties. Reasonable cause is a no-go due to how many personal expenses ran through the business, and first-time abatement doesn't work for accuracy-related penalties. You see, so a lot of the outs that we typically have in terms of getting these things addressed are not available in all situations, right? So you may not have that many options in terms of reducing the tax or getting the penalties eliminated or what have you. So that number that you're looking at may very well be the number you end up paying. So this leaves client with a $151,000 bill to the IRS across the 1120, which is the corporate return, on which $78,000 is due, and the 1040, which is the personal return, on which $73,000 is due. Is this client basically at the end of their options here with the installment agreement as their last option? And that also has stipulations and requirements associated with it. And when business owners evaluate the cost of accounting and bookkeeping, they're often not taking into account what can happen if they avoid it. It's kind of like changing the oil in your car. You have to do it. Nobody enjoys it, but it will make your car run smoother in the long run. It's going to pay off in the long run, as will your investment in the accounting and bookkeeping, making sure the books are tight and right from the very beginning. Because as you can see, if you just throw everything at your tax preparer and they have another 400 returns that they need to do by the deadline, they're very often going to say, all right, well, let's do the best job we can and call it a day. Now, is that the right way to do it? That's a separate question. Often you would have to put that return on extension and take your time doing it to make sure it's done right. But it does come with its own expense, right? Because we're looking at a full year of accounting and bookkeeping, trying to understand what the transactions are from January of the prior year. Client has no idea. The records aren't available. The bookkeeper quit. The girlfriend broke up, and nobody knows where the numbers are coming from. And a small accounting and bookkeeping monthly project that could have been going on throughout the prior year, where everything could have been smooth, now turns into a potentially life-changing scenario, as you could see here. Now, from the client's perspective, they really don't have that many options. And when you're talking $19,000 in penalties and $9,000 in interest, that's $28,000 that they're spending, not including the state implications, not including the fee that they're going to pay their preparer to handle all of this. So if you even call it $35,000, you have to ask yourself, what would you spend on competent accounting and bookkeeping services throughout the year to avoid this hassle and the stress and the ambiguity in terms of how this is going to play out? Because not all businesses out there can handle a $151,000 hit all of a sudden. All right. So the idea here was to emphasize that if you get it done right from the very beginning, keep everything tight, have it done right, you're going to be in a good position to have a smooth tax filing process where your accountant doesn't have to rush through the books to put a return together, which could then become problematic down the line. So if you take anything away from this little case study that we looked at here, you have to make the investment. If you're going to have a business, you need to make sure the numbers are right. Sometimes people can fall off track, but you have to catch up, make that investment, say, hey, 6 months ago, the accounting fell off the rails. That's okay. We can catch it up. And from there, put you on a monthly accounting and bookkeeping plan where everything is done throughout the year. So there's no having to remember, there's no having to dig up records and receipts, and everything is done contemporaneously. So that is how you make sure that your business runs smoothly. And if you have any accounting and bookkeeping issues, Efros Financial provides a full suite of accounting and bookkeeping services. So we also do the tax preparation as well. So when you need the return prepared, we can handle that for you. The info to reach out to us is in the description. Now, if you found this video helpful, if this was enlightening, destroy that like button, would you? Like the video, subscribe to the channel, leave a comment down below. I love reading your comments. And if you ask an interesting question, I might just answer it in a video just like this one. And with that said, hopefully this was helpful. Thanks for watching.